Let's talk some tech. Let's go into the numbers. Let's get our feet on the ground with Cisco. 91 cents ahead of 87 estimated. Sales 13.8 billion. Street looking for 13.77. The bar here probably higher than any of the earnings from the last year and a half in which Cisco was basically pinned under $50. Now that it's been trading at 60, highest since basically coming off COVID. The expectations maybe starting to lift off a little bit here. Caroline, it is kind of one of those trades that folks have been arguing in the last quarter is going to see some of this tech uplift from new devices and needs, but I don't know, it might still be a hard sell to some extent.
Well, it looks like at least initial reaction is positive. I think, as you said, the bar was getting higher, especially with it so close to the I think 3-year highs. On my chart it says 52-week highs, but I'm pretty sure it's the highest level in 3 years. It's already up about 7% or 8% this month heading into the report, but we are seeing a pop based on the numbers. You talked about the trailing numbers, the top and bottom line beat, but if you take a look at the outlook, that's coming in better than expected as well. So for Q2, adjusted EPS of 89 cents to 91 cents per share. Wall Street was looking for 87 cents per share, so even beat on the low end there. On revenue of $13.75 to $13.95 billion. The expectation was for around $13.7 billion, so that came in better than expected. And then full year outlook of $3.60 to $3.66 per share. The expectation was for $3.58, so beat there. And then full year revenue of $55.3 to $56.3 billion. The expectation was for $55.89 billion. And I was just taking a look at what they previously had said, given 55 to 56.2. So also better than that as well, by a little bit on the low end, high end there. So boosted the outlook. And it seems like based on initial reaction, Cisco shares actually were getting a pop, and apparently, as I was talking, started to fade. So maybe this plays into your reversal trend that you were talking about. But keep in mind, shares were already up, pretty significantly, about 18% year to date heading into this report, about 30% from the August numbers after that better than expected report.
$59 right now, just a little bit below where we closed. There's this recent narrative around Cisco that it's an AI beneficiary, and I'm having trouble getting it through my head, KG, because there are negatives on sales as far as the eye can see, trailing and forward. There's shrinkage at this company. So I get a lot of that's coming from the telecom business, which is a massive drag. But I don't really see where their big uplift is. What am I missing here?
I think it's going to be the hardware side when you're looking at the networking infrastructure. It could be a tailwind for them, but I don't think it's really materialized. I mean, when you're looking at the numbers, it was a decent guide moving forward. It was a decent quarter outside of the product orders. So that was up 20% on a year-over-year basis. So I think that's a tailwind. But the other side of that, if you X out Splunk, it was only up 9%. So Splunk's the only thing that's really driving growth for this company right now. That might be the only thing that probably causes maybe some investors a little bit of uneasiness, a concentration when it comes to the products that are in demand there. And they probably do have to make a little bit of a shift when it comes to trying to preserve margins. But, it's had a really nice run, very high bar. If it can actually stay around these levels, I think technically, if you're looking at a 3-year weekly chart, it actually still looks good. I mean, it's trying to break out of this, 3-year basing pattern and basically 2 cup and handles put together here. So it's a good report, nothing too negative, but I think they want to probably expand the product offering or have the revenue mix a little bit more diversified than what we're probably seeing.
Is it an AI winner, KG, or is it an AI lurker, just kind of lurking around in the background, picking up whatever's around?
Well, I think over time it probably will be a winner. I mean, the competition in this space is pretty heavy too. We have to keep that in mind. But I do believe that they're going to be a beneficiary. I think it's just going to take a lot more time, and then the margins probably aren't going to be as aggressive as probably the street's used to when you're talking about artificial intelligence beneficiaries. Okay.
Yeah. All right. I mean, look, the numbers aren't terrible. Stock went on a good run. Maybe it's just got to reset. It's just hard to get me too amped up when there's negatives in the outlook. I'll give you the last thought, Caroline.
Well, just in terms of the AI, obviously it's not a huge AI play right now, but the CEO, Chuck Robbins, said our customers are investing in critical infrastructure to prepare for AI. And with the breadth of our portfolio, we are uniquely positioned to capitalize on this opportunity. Also, do think it's important to note you're not the only one super amped up on this name. If you took a look at the analyst breakdown heading into it, more than 60% were sitting on the sidelines heading into it with a median price target below where it closed today at $57, and it closed at $59.20. So, I don't think that there was a whole lot of optimism, at least from the analyst community, heading into this based on the the numbers.
That's probably working for it then, I guess, with the lowish expectations, which they might match the fundamentals, but at least that kind of gives it some normalization compared to some of the other ones that are, it's super hyped up. Forward PE of 16.5, it's kind of just neutral. So it can just kind of float along with whatever the market does, I guess. Market goes up, Cisco goes up. Market goes down, Cisco goes down. That's kind of like my view, maybe at the moment. All right, thanks, guys. Caroline Woods, Kevin Green, appreciate the thoughts here on the session.